Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you for having me.
Well, stocks on Wall Street were mixed on Thursday. On the one hand, oil prices recovered from their historic lows, but then there was the failure of a trial treatment for the coronavirus. What's the story there?
Yes, as you said, market's been pretty much volatile throughout the Thursday session. And it actually closed at pretty much flat. If you look at the Dow Jones, it gained very slightly by about 0.2%. S&P was slightly down by 0.1%, and NASDAQ was pretty much flat. As you said, the reason for that is because we had seen some recoveries on the oil price. WTI futures June delivery contract soared more than 20%, and it settled at $16.5 per barrel. And also, we see the Brent prices all going up as well. But we were seeing these numbers related to the economic numbers. The Labor Department showed that another 4.4 million workers filed for the jobless benefits last week, and bringing the 5 weeks total to 26 million, which is about 15% of total workers. Of course, the 4 weeks average is around 5 million, so we're not going to see that entire 26 million all being unemployed, but nevertheless, this is a bit of a troublesome, as these numbers are pretty much the same as the gains of new jobs since the 2008 financial crisis. And also, it related to the Gilead stocks. The company gave a promising yet inconclusive assessment regarding the treatment, remdesivir, to treat the coronavirus infections. So it was pretty much mixed in terms of the U.S. market.
Right. Well, Korean stocks closed quite a bit lower today. Both the KOSPI and the KOSDAQ down well over 1%. Why is that?
Yes, as you said, Korean market was down about 1.3% for KOSPI and 1.7% for KOSDAQ. I think there are a couple of reasons for that. Number one is because there was rumor in regards to the North Korean leader Kim Jong-un being seriously ill, and he really has not shown up his face yet to the public. So there's quite a lot of doubts and a lot of speculations are floating around right now because it's not really confirmed that he's not seriously ill. So because of that, equity markets were taking quite a bit of a hit ever since last Tuesday. I think this is still lingering around for the last several days. And also the second reason is that Korea's GDP numbers came in at quite significant decline from the previous quarter. It's showing about 1.4% Q-on-Q decline, which is troublesome. And also this is followed through for the second quarter is that the export numbers are even worse. It is showing 27% drop year-on-year numbers for first 20 days of April. So all these things are putting a pressure on the Korean equity market. However, though, we'll continue to see additional money inflow to the equity market. Retail investors are continuing net buyer of Korean equity market. Today, they were still buying another 700 billion won worth of equities. Every day, a similar amount of monies are actually piling into Korean equities. So quite a bit of a strong support in terms of the overall equity market at this point in time.
Well, now the Korean won has weakened a fair bit against the U.S. dollar, and the price of gold, meanwhile, continues to rise. What's your outlook for the exchange rate and the so-called safe havens?
Right. If you look at the recent U.S. dollar movement, it seems to show quite a bit of a strength. We saw it recover back to above $100 index. And if you look at today, it's going up slightly again to about 100.9. So because of that, we are seeing some residual implication for the Korea's won. and the Korean won has depreciated quite significantly to 1241 on the day when the Kim Jong-un issue was hitting the market. It kind of stabilized, but still, nevertheless, it is moving a bit of a depreciation territories. Right now, it's around 1236 level. We think, though, with the U.S. continue to inject liquidities, and significant amount of liquidity means that dollar probably will no longer strengthen in the future. It probably should moderately depreciate it over the period of time. If that's the case, we do think that the Korean won should stabilize at around 1,200 level. Right now it's at 1236. So we do think that over the next probably several weeks or so, Korean won should be stabilizing anywhere between 1,200 to 1,240 range. So we are probably on the high end of it. As for the gold prices, the safety measures are really kicking in here. As I've said, there's a huge amount of liquidity injections given by the Fed at this point in time. If you look at the Fed balance sheet increase, and if you look at the money supply growth rate and the level of the MO and M1 growth rate, it is ridiculously high. And because of that, what that means is that the value of currency should depreciate in a global scale, not just U.S. dollars, but all around the countries. If you look at every central banks, they're basically pumping money, printing money, and using a very aggressive monetary policy. If that's the case, then the supplementary so-called gold, the supplementary assets should continue to gain interest. And if you compare that to 2008 numbers, gold hit 1920 at the peak of the gold prices. Right now, it is at around 1750 range. So we do think that there is more room for gold to appreciate in the future, as long as coronavirus impact making all the central banks continue to print money.
Got it. All right, Mr. Yu, thanks for coming on today, and have a great weekend.
Great. Thank you very much. Have a great weekend.